Whether you're a seasoned investor or someone looking to buy their very first investment property, you need to know what are the tax advantages to investing in real estate. And another thing that you absolutely have to know is what is the difference between cash flow and income? Because if you understand that, you're going to be successful in real estate investing. So if you want to know the answer to these questions, you need to watch this episode. One of the biggest advantages of being a real estate investor is the tax advantages that come along with it. And today I want to talk about what they are because it's significant. And in my opinion, it's maybe one of the, if not the biggest reasons to invest in real estate. The first tax advantage I'm talking about today is depreciation. So the IRS lets you depreciate the cost of your property over time. A residential property, you could depreciate over 27 and a half years. A commercial property, you can depreciate it over 39 years. And what that means is it's really just a paper expense that you can use to lower your taxable income, even though it's not money that you've actually spent, right? So when you buy that house, you take your purchase price, if it's a residential property, divide it by 27 and a half, and that's what you get to depreciate every year. It's a huge tax advantage. Another big tax advantage to investing in real estate is your mortgage interest deduction. We know that when you purchase a home, especially in the first few years, your mortgage payment, the vast majority of that payment goes towards paying interest. Every year, you'll get a statement from whoever it is that is managing your loan, and it will tell you, hey, this year you paid this much money in mortgage interest. That becomes a write-off as well. So in those early years, it can be one of your biggest deductions. You also get to write off your property tax deduction. State and local property taxes on investment properties are deductible. Operating expense deductions as well. Things like repairs, maintenance, management, insurance, marketing, utilities, landscaping. All of those things you get to deduct. It ends up being quite a bit of money. There's also capital gains advantages to investing in real estate. If you hold a property for more than a year, your profits are taxed at long-term capital gains rates, which are typically lower than ordinary income tax rates. And one of my absolute favorite tax advantages for the real estate investor is the 1031 exchange. For those of you who don't know what a 1031 exchange is, it allows you to sell an investment property and roll the proceeds into another similar property without paying taxes immediately on the gain, deferring taxes and compounding your wealth as you go. So those are 6 pretty significant tax advantages to investing in real estate. Those tax advantages, not only do they work for your property, sometimes you can actually operate at a net loss on an investment property, which means you can reduce your other forms of income as well. And that's going to lead to the next part that I wanted to talk about, which is what is the difference between cash flow and income? I think if you can grasp this concept, not only can you be a very successful real estate investor, I think you are on the path to generating significant, quite possibly generational wealth for you and your loved ones. So what is the difference between cash flow and income? So income is what the government taxes. Cash flow is money that goes in or out of your pocket every month. And I think what you need to know when you're figuring out cash flow and income is understand the formula for how we figure this out. So how do you figure out what your cash flow is? It's pretty simple. It's the amount of rent that you've collected minus the operating expenses and your mortgage payments. So, for example, if you have an apartment, or let's say you buy a single family home, we'll make this easy. You buy a single family home and you rent it out for $2,000 a month. And then your expenses between your mortgage, your taxes, your insurance, whatever else there is, your total expenses are $1,500 a month. That gives you a $500 per month positive cash flow. Now, here's what's important. That $500 a month cash flow, by the time you're done with your tax advantages that we talked about, it may end up being zero income. And what I mean by that is because you get to write off things that we talked about, like depreciation, mortgage interest, and those being the big ones, that $500 a month cash flow may go to a net zero when you factor in mortgage interest and depreciation. And not only could it go to zero, it could actually end up being a negative on your income. If your mortgage interest and your depreciation add up to more than your monthly cash flow, that means you can actually reduce other income as well. That's why people like, if you've ever heard of Robert Kiyosaki, the author of Rich Dad, Poor Dad, he will tell you, very proudly I may add, that he does not pay taxes. And the reason that he does not pay taxes is because he doesn't have any income, but he's a millionaire because he has significant cash flow. So I think if you're going to be a real estate investor, and if you're someone who's looking to build significant wealth for yourself, you need to focus on increasing cash flow and decreasing income. Income is taxable. Cash flow is not. And if you can use that formula and you can balance it out between your cash flow number and then when you add in your mortgage tax, your mortgage interest deduction and your depreciation deduction, if you can get that cash flow to zero or negative, you are on the fast track to becoming quite possibly a multimillionaire through real estate investment. If you're interested in learning more about that, work with a realtor who understands the math, who can help you get to where you're trying to go. And it may be the best relationship, the most successful relationship, and certainly maybe the most profitable relationship you could ever have in a business sense. So I think there's a lot of advantages to investing in real estate. And if you play your cards right, you'll be on the fast track to generational wealth. Thanks for joining us for today's episode, everybody. If you want to hear more content, follow us at Real Estate Right Now Pod on YouTube. Once you're there, don't forget to subscribe and leave a review. And if you want to follow me directly, check me out. It's Dave Wychak at Facebook, LinkedIn, TikTok, Instagram, all the socials that you're already using.